Hello everyone, and welcome back to the channel. Today, we're going to take a closer look at an intriguing development in the Malaysian stock market, the top 5 Malaysian stocks that truly outperformed their peers in September 2025. These companies achieved impressive returns amid a complex mix of local economic factors and global influences, making their stories both informative and significant for anyone interested in Southeast Asia's investment landscape. Understanding what propelled these stocks can provide useful insights into broader market trends, sectoral strengths, and potential risks facing the Malaysian economy. Whether you're a market watcher, investor, or just curious about economic dynamics in this vibrant region, this breakdown will offer you a detailed snapshot of key winners and the forces behind their success. So, let's dive right in. Before we go further, a quick reminder. This video is created purely for educational purposes only. It is not financial advice and should not be considered as a recommendation to buy, sell, or hold any investment. Always do your own research or consult with a licensed financial advisor before making any investment decisions. Starting with the most notable performers of September 2025, these 5 companies delivered returns ranging approximately between 14.6% to 30%, considerably outperforming Malaysia's benchmark equity indexes and demonstrating strong sector leadership. The top performers were UWC Berhad, achieving a remarkable 30% gain, Malaysian Cement Berhad with a robust 23.3% increase, Farm Fresh Berhad rising 17%, Simi Darby Berhad climbing 16.3%, Scientex Berhad gaining 14.6%. Each of these companies operates in different sectors, with diverse growth catalysts that align closely with Malaysia's macroeconomic priorities and emerging market themes. Let's begin with infrastructure and construction, sectors that have been key drivers of economic activity recently. Malaysian Cement and Scientex capitalized on Malaysia's expansive development agenda. The government's 13th Malaysia Plan has earmarked RM430 billion for development expenditure over the next 5 years, underscoring a long-term commitment to infrastructure growth. Additionally, Malaysia has an RM150 billion infrastructure project pipeline in progress, which includes significant investments in data centers. This booming data center market is valued at over USD 3.2 billion and has attracted global giants like Microsoft, Google, and Amazon Web Services to establish regional hubs here. These developments create sustained demand for construction materials and engineering services, benefiting companies like Malaysian Cement and Scientex. Turning now to technology, UWC Berhad stands out with extraordinary revenue growth of 55.47%, reaching RM386.18 million. Their business focus on precision manufacturing components essential for semiconductor and artificial intelligence infrastructure aligns perfectly with Malaysia's role as a rising tech hub in the region. Malaysia's strategic push to become a data center nexus has fueled demand for tech hardware, leveraged by these global cloud investments. UWC's performance is a strong illustration of how targeted industry growth sectors can drive company-level success. In the consumer staples space, Farm Fresh demonstrated resilience and steady growth with a 21.07% increase in revenue to almost RM1 billion. The company has benefited from consistent domestic demand for dairy products alongside growing export volumes, a notable feat in a sector often viewed as defensive during uncertain economic times. Projections show a 15.3% annual earnings growth and an impressive 18.5% return on equity, underscoring both efficiency and growth potential in their operations. Simi Darby, a well-known conglomerate, marked a strong turnaround in September with a 16.3% rally. This recovery followed a period of underperformance and was fueled by the consolidation under UMW Holdings and solid improvements in its industrial division. This example highlights how restructuring and operational efficiency in diversified businesses can reignite investor interest and performance. Looking at the bigger picture, a few broader trends provided vital support for these stocks. The Malaysian ringgit appreciated by 6.3% year-to-date against the US dollar, making Malaysian equities more attractive to foreign investors and boosting overall market valuations. After a weak Q2 for foreign direct investment, inflows rebounded strongly in August, with RM3 billion targeting key sectors such as financial services and data centers. Meanwhile, Malaysia's construction industry is on track for nearly 10% growth in 2025, with a healthy project pipeline worth RM58.8 billion fueling demand for materials, engineering, and property development. Despite these positive developments, recent market data shows some mixed short-term signals. The FTSE Bursa Malaysia KLCI index recently experienced minor fluctuations, but maintains an overall upward momentum since mid-2025. Market analysts remain cautiously optimistic for the remaining months, noting that global factors like U.S. trade policies and geopolitical tensions continue to influence investor sentiment, while domestic policy initiatives aim to sustain economic recovery and momentum. The technology sector, which drove much of the recent gains, faces some external risks, including ongoing U.S. restrictions on chip exports, yet the local ecosystem is showing resilience due to sustained regional demand and diversification of supply chains. Valuation levels remain a topic of debate among market players. Premium pricing for some of the top performers, especially those with high price-to-earnings ratio like UWC, suggests that investors are pricing in strong future growth, but this also raises the potential for periods of pullback if expectations aren't met. Hence, many market watchers advise careful monitoring of fundamentals alongside technical indicators. Furthermore, the construction and materials sectors, though benefiting from significant government projects, are sensitive to delays in approvals or funding, which could lead to cyclical volatility. Hence, ongoing infrastructure spending will be a key factor to watch. To recap, September's top-performing Malaysian stocks represent a fascinating blend of steady structural growth in tech and infrastructure, combined with cyclical rebound plays in conglomerates and consumer staples. The broader macroeconomic environment, including currency strength, accelerated infrastructure spending, and renewed foreign investment interest, has created favorable conditions for continued market leadership. However, prudent risk management remains essential given the elevated valuations and global uncertainties. If you found this comprehensive breakdown useful, please consider liking this video and subscribing to the channel for more updates on Southeast Asian markets. Feel free to leave your thoughts, questions, or insights in the comments below. Your engagement is always appreciated. Thank you very much for watching. Stay curious, stay informed, and I'll catch you in the next video.